What's up, traders? Whether you're new or returning, welcome. Today is Tuesday, August the 11th, 2026, and the markets are boring as we are in the dog days of summer. We're going to look around the markets today, see if we can find some setups, obviously. The only thing in terms of high event risk this week is CPI tomorrow. We got core inflation rate, CPI numbers, and then pretty much nothing for the rest of the week. And it's going to be like that for the rest of the summer, essentially. I mean, we don't really have much high event risk in August. You're not going to start seeing more of it. We will get core PCE numbers about the last week of August, then we'll go into September. Then all of the high event risk will start to cycle again, and then you get a Fed meeting in mid-September. So that's going to make for some really thin volume days. There are trade opportunities when we're in markets like this. They're just not going to be a lot of directionally biased trading opportunities. But here we are. We got Bitcoin pulling back yesterday. Don't really know what happened. Just it rolled over. The 50-month EMA is up here at $65,713 until you're closing at least a few days above this. That appears to be where the near-term resistance is on Bitcoin. And then obviously you have June 15th high. It is only, you can see here on the monthly chart, it is not a monthly swing high. Last month's swing high at July comes in under this level. This is just a weekly swing high, but nonetheless, it is where the majority of the sell side liquidity is setting. So I kind of assumed Bitcoin would liquidate that before it rolled over. But I mean, it is super thin out there. There is not much volume anywhere, not just in Bitcoin. We have a little more than 100,000 contracts traded pre-market this morning. That is super light on the SPOOs. So volume is thin literally everywhere. So thin volume makes for very boring trading days. But we're gonna look for opportunities. I nailed a good opportunity last week on Bloom Energy. I sold some premium. I sold a strangle, to be honest with you, on both sides of the market. That trade's already working out nicely, and I'm only 2 days in. But the IV crush has been absolutely phenomenal. These are the kind of trading opportunities you want to look for when you're in this kind of market. But anyways, gold up nicely. DXY is acting like it wants to make a move here, as we did get a slight pop yesterday. Not much, just a slight pop. And then today you're seeing slightly upside continuation. You did take out yesterday's high so far. So we'll see what happens here. If the dollar is strong, there might be a near-term short side setup on something like XAG. I'm only bringing that up because it was asked of me this morning if I would think about or, put on a short on silver. Hypothetically, the answer to that would be no. I mean, usually no, not if I have a bullish bias on something. I don't necessarily have a bullish bias on silver. My bias is on gold, and I am long gold. I like gold higher, but I don't want to buy it where it currently is. I would love to see a multi-day pullback or a multi-day correction, sideways price action, anything, something that I can get in. We are going to be closing a trade today on the GLD. Let's close this up right here. As we put this on last week, we sold that at $3.10. It's a put. We just sold a naked put because we were wanting to see a pullback on GLD last week, and we were going to take the shares, but we never got the pullback. So there we are. We're booking another close to $300 worth of gains. We're going to close this out because I have a rule, generally speaking, if I'm selling premium, I'm going to take profits when I achieve 75% of that premium, especially if it's got, plenty of days left to expiration. Max profit on this trade is $3.10. I'm already at $2.71. There's really no point in setting in it for 5 more days. just to make an additional 20 or 30 bucks. So we're going to close this at the open. There's that Bloom Energy short. As you can see, we're racking up pretty nice P&L here just on the volatility being crushed. Love it. Love it. There are trade opportunities out there in this kind of market environment. You just got to know where to look. But here is the the silver setup as of right now. Essentially, most people are going to be looking at shorting something like silver or gold because they missed the long, generally speaking. So they just want to, maybe get into a position. You are trading right here on silver at last week's high. This is on the perps, the futures perps. So it's in a crypto exchange, but perpetual futures are better than regular futures because they do not expire. It's a perpetual contract. But anyways, on the perps, this specific perp is on Binance. Binance has the most trading volume, so we'll look at it there to get our analysis, our price action analysis. Generally, you are trading at right now last week's high. So essentially speaking, as long as you're under this price, then you are not breaking out to the upside. You have already broken out to the upside, and you have slightly pulled back off the highs. So as of right now, this week looks fantastic. It looks good. It's only Tuesday, second day of the week. Could today be setting the week high? Yeah, it could. You could be looking for a pullback into last week's range. For that to occur, price has to stay under this price. So 65.34 is that level. Here is the 4-hour chart. As you can see, you did get a downside expansion here after taking out yesterday's high. The sellers showed up. They got a midpoint correction on yesterday's range. You can see where the buyers were yesterday. You got the expansion. If you notice where the point of control is currently right now, it looks like buyers are once again showing up. So it does look like people are looking for an upside expansion. I typically don't like to be shorting into strength. I like to short weakness. But you do have downside pressure on cumulative volume delta. It's just an indicator. It just lets us know that the market sellers are more aggressive than the limit buyers. That's what that means. It does not mean that price will go lower. However, this is typically what we look for if we are interested in a short. Basically, what we're looking for the rest of the day is this level to hold, and then you get continuation lower on the deltas. If that happens, then yes, you could potentially make a lower daily low. I wouldn't be looking for anything insane like a retest of yesterday's low. You would need dollar to literally be ripping to the upside in order for silver or gold to be that weak, I think. A lot of people have their eyes on gold and silver right now. We brought this trade up last week right as it was getting ready to start breaking out because we realized that China's economy is coming back online. This happened because as of right now, the things in the Middle East are calming slightly. So if oil backs off, all that good stuff, then China will be back to full swing. If they get back into full swing, that should be positive for gold. That's why we were looking for the gold trade. Then gold broke out above a trend line. That and the moving averages essentially makes it a legit breakout. It did that on large volumes. So typically I want to be long on something like that, not looking for shorts. Okay, so if you're going to short silver today, 65.34 is like going to have to be your line in the sand, because if you're looking for anything higher than that, you're just essentially shorting random swing highs. There is no edge in a scenario like that. Stop losses tend to get ran over in scenarios like that. But that's the price we're looking at. I just wanted to make sure you were aware of that before the market opens. We got 20 minutes until the market opens. I'm currently setting in a 1 contract short on the NQ. I don't like the NQ for a sell today. If we take a look at the VIX as of right now, VIX is trading at 1552. It is up on the current session. You did open lower, so you are up, but you're trading inside yesterday's range. The only way I like a short on the VIX, on the NASDAQ, is that the VIX is making a fresh 2-day high. So if today breaks out above yesterday's high, okay, then I would be more comfortable with a short. But because of where we are inside the weekly range, we're under last week's open. Last week had a nice upside spike and got faded. So if you're trading under this line on the VIX, I would be more bullish risk than bearish risk. And see, you did get a slight volatility spike in Bitcoin yesterday. That, of course, helped Bitcoin to sell off slightly, break back under the 50-day exponential moving average and the 21-day exponential moving average. So this is not a great look for Bitcoin right now. People are going to be looking to sell today's high. If Bitcoin fails there, then your shorts are probably going to jump on it. All right. So be aware of that. We go look at the intraday chart. You can see you got a nice recovery on the last 4-hour candle. That looks okay. 4-hour chart still looks fine for upside continuation. This is not bearish yet. If it holds at 4-hour support here, I would be more bullish here on Bitcoin than bearish. Right? Now, with that being said, deltas look neutral. There's not really, it can go anywhere from here. You're literally at the neutral line. So I guess keep an eye on this. If you start to see deltas push above 68, then you might want to be a little bit more long biased. I don't really have a setup for you on Bitcoin. Yesterday's high is literally it. You're trading under last week's close. You didn't take out last week's high. You're above last week's open. You're literally in the middle of last week's range. That's it. I mean, that's what you got. Bitcoin has been very, very sideways for 5, 6, 7 weeks now. It is pathetically light and boring. So, I mean, if you're looking for upside expansions, I can understand why. I can also understand if you're a seller. I really can. It's just that kind of market. Be careful. Don't get chopped up. I mean, those the rules. I guess if I was going to short Bitcoin, it would have to be at a fresh day high, and only if it failed there. I would not want to short it up in here. I mean, the best trade is going to be up at June 15th's high, and that's only if you get a rejection up there. If we go real quick, let's see where we are in terms of funding fees. Just to see who's getting paid. I guess I could just look at my current positions and be able to tell which one is getting paid and which one is paying. But we'll go over here and look. Funding rate still set to pay sellers. This is why you're still seeing more selling pressure than buying pressure, I would assume. We have seen nice inflows on Bitcoin. These are your spot ETF inflows. I would much rather see it like this than every single day red like we got back in June. Literally every day almost of June was red. So you do see more two-sided trade happening. This is why you're seeing more choppy markets. So this is a good sign, at least. At least we have some semblance of demand out there. I mean, it's looking rough. Very light volumes. Very, very light. All right. So yeah, I mean, that's that. I was looking for the short on Bitcoin through Pingu. Obviously, that trade had got stopped out as Pingu broke out last week. And since Pingu broke out last week, this week it hasn't really done anything. I was actually looking for a long on Zcash yesterday. As Zcash was pulling back, we were watching the yearly open as resistance. We knew that if we bought it, it would have to break out above this. It did not work out. That trade got stopped out as well. So this has literally been the story in crypto for the last 6 months. You're just not getting any kind of continuation on upside trades or downside trades. I mean, if crypto is the only thing you trade right now, it's a tough market for you unless you're aiming specifically for very small intraday moves. We have a trader in the Discord that is literally killing it, but that's exactly what they're doing. They have shrank the amount of profits that they're looking for. They're essentially getting into a position, and when they get a move, a very small move in their direction, they're bailing on it. And by doing that over and over and over again, getting a lot of nice wins. So there is ways to effectively trade this. I myself like the larger moves in terms of a scalper. I'm just not that aggressive of a scalper. I like taking just a few positions and letting those positions work for the majority of the week. That's how I scalp the markets. It's just, in my opinion, I do better when I do that. As the more I trade, the less money I make. When it comes to scalping crypto, obviously options and futures in the stock market are a little bit different. All right, so SpaceX had a nice bounce last week, saw some upside continuation yesterday. This is really good, really constructive. Basically, it looks like a short covering rally. There was an unlock phase, so that brought more shares to the float, reducing the short float. Because the lockout period ended, you didn't see massive sell side pressure. Because you didn't see that massive sell side pressure, that has caused a lot of shorts to unwind their positions. They were short ahead of the lockout period, assuming that when the first lockout period ended, those people would dive bomb or get out of their shares, and that would cause more downside pressure. That didn't happen. Now you're seeing that short covering rally. So as of right now, 105.27 looks to be around the bottom side of the range. If SpaceX could pull at least back to like 120, I'll put some more positions on it. Right now, I want to wait until all of the lockout period is done. You've got 2 more coming. So essentially, this thing could rally all the way back up to who knows what price and then still make fresh year lows. So expect some two-sided trade to happen here. If you're looking for a long-term investment, it literally hit our downside targets. We had downside targets on SpaceX of 112. That's essentially where I wanted to start getting involved in SpaceX. I did buy 10 shares the other day just because we were bored and live for several hours just to do something. I bought 10 shares. It doesn't matter how many shares I buy. I always use a stop loss. I got stopped out of that. I bought at like 130. This thing went all the way down to 103. I'm not going to just set in a loss like that because, whatever, right? I like to get in, get out. I'm not much of a long-term investor. I want to see a longer-term bottom form. 5 days is nice. 6 days nice, but I would like to see that take place on the weekly chart. Would love to see about 8 or 10 weeks of sideways price action on this. That would be a longer term, more, investable bottom, if you will. If you look at this on the weekly chart, you don't have any consolidation yet. None. Zero. You were literally trending down, and then last week, a bullish engulfing. So, yeah, if you caught it to the upside, kudos. Good. That's what you want to do. But right now I'm going to stick with just selling puts because I can generate profit on a week-to-week basis while I'm waiting to get that fill. Right now is a good time to do that. This is a perfect market to sell premium, especially put premium if you're bullish an asset. I do think SpaceX will hit $200 probably in the future. I mean, absolutely. Could it? Hell yeah. Look at Tesla. Just look at Tesla. Tesla is the proof. Elon Musk, publicly traded companies tend to do well in the stock market. So yeah, I do believe that SpaceX could be looking for support. I think it's premature to say support is in. You do have a few days of support here. So obviously you're going to want to see SpaceX not closing day candles back under 115. Essentially, you want to see the midpoint of this week's range hold as support. So you would just fib last week's low to high. And then any correction or any pullback into this week's range, you're going to want to see like this whole range somewhere in there hold. I realize it's a wide range, so it's not going to be very helpful to say day traders, but to people that are looking for investment. The 618, the 50, the 618, and the 786 are all investable places as long as you mitigate your downside risk, right? So I wouldn't buy it and then not put a stop loss out, because we know that several analysts put actual real world value of this ticker down in the 60s. That's more than a 50% drop from here. So if you're willing to lose over 50% of your money, well, you can buy it right here. You know what I mean? You can buy it right here. But anyways, another thing that we were looking at is, or lastly here, because of the thumbnail, is USDJPY. Most retail are bearish on this right now. And we've pretty much went in depth of the macro reasons why we're not bearish. There's like a lot of them. It is very expensive to set in long-term dollar shorts. Long-term dollar shorts. So what I mean by that is day traders obviously don't care about funding rates or rollover rates. It doesn't bother them because they're looking for a very small range. You got a lot of leverage and yada yada. That's typically what this channel focuses on. But because we're not seeing big moves anywhere right now, it makes it more difficult to do something like that. So essentially, I've gotten myself to be positioned for long dollar. So I have a very small Forex account over here. I am going to kill this account at the end of this year. It will be the last time I do small accounts, because I don't think people care anymore, to be honest with you. Might be like one or two of you out there that do. So I'm just essentially growing a small account. I started this account with $100, one hundo. But right now, these are the current positions that I'm sitting in. I have on long US dollar JPY, short euro dollar, long US dollar Swiss franc, and euro British pound yesterday, or I put the short on Friday. You can see I sold Friday's high. If I go into a daily time frame on this chart, this is Friday's candle right here. My short entry is at Friday's high. I sold Friday's high because it was coming into resistance and it was under Thursday's high. So as long as it wasn't above Thursday's high, I knew I had a higher probability of being in the short side, especially since I have a long dollar bias. Also, we checked the rollover rates on this. And surprise, surprise, you get paid to hold short euro pound. If you want to get long euro pound, well, you got to pay rollover fees. So that could be that, like, literally, that's what helped us devise that bias. So naturally, we got that move yesterday. We broke down, we set a fresh day low. You actually bounced there early. So yesterday morning, I put a tweet out that, hey, we're bouncing here at Friday's low. That took place right here. You can see how you traded into Friday's low and then bounced. So technically speaking, that would have been profit target on an intraday trade. We would have been targeting that low as it was the prior day's low. That's where you should have scaled out if you were scalping this on a daily trade basis. I'm looking to hold it. Why not? I get paid every single day this trade is open, regardless if price is appreciating or depreciating. It does not matter. Rollover rates, they're very small. They will not affect a small account like this. So it is what it is. But I'm thinking you're probably going to see a larger downside move out of this area. This has a nice, beautifully forming downtrend on the longer time frame. So do I still like shorts on this? The answer is yes. So if you're watching Euro Pound, or if you're an FX trader, even if you're not, if you want to be, like I said, I opened this account with $100. You don't need much money to trade FX. It's a beautiful market. It's open 5 days a week, 24 hours a day. And you get movements in it sometimes. And it works pretty much like any other market, right? Supply and demand. But anyways, it's starting a nice little downtrend here on the daily. Let me just make this one chart the whole monitor so that way you can see it really good. This is what we're looking at. You're in the year 2026. There's your yearly high. This was your yearly low until you broke it and made a fresh yearly low right here. Once you did that, you set in a downtrend where you were making lower yearly highs and lower yearly lows. So for the year 2026, downtrend. Your moving average structure here on the daily, also downtrend. The 200 is above the 50. The 50 is above the 21. Yada, yada, yada. You can go all the way down with it. It's in a downtrend. And if you look at the weekly time frame, you're not quite structured to the downside yet. The 21 is looking like it does, in fact, want to cross that 200. Once the 50 gets under it, you can say you have full-on bearish structure. This has been sideways for multiple years up here at this range. Many months, this thing traded sideways. It was trending. It broke out. Right here was the breakout, and then that breakout failed 1 month later. Then you went into a period of where you had about, 6-7 months there of sideways-ness. Very choppy. But it looks like it wants to start heading lower, so we'll short it and see what happens. But I do like it lower. I'm going to like it lower as long as we're trading under Monday's high. So you can short it literally anywhere in today's range that you see fit, as long as it's not above Monday's high. If you're above Monday's high, this is a failed breakdown, and you're probably going to liquidate this high. So as long as you stay under yesterday's open, I like it lower. Midpoint is about the first place that I would even try to put risk on. But you may not even get up there. It just depends. This is a pretty nice looking candle here. Yeah, you might get back up to 85, 568. We'll see what happens. But I do like it lower for more downside continuation. But all these trades are being paid right now. Every one of them. Every single day, a little bit more money goes into the P&L. And then if I get price appreciation or depreciation, candle go up or candle go down, I will make more money. So things are good. The small account is good. The small account is up 100%. So it's doing just fine. All right, back over to the main monitor. So yeah, I like USD JPY higher. It is going to find resistance up here. Most likely you're going to chop around in this range for some time. But if it ever does get back down to this low, I would be a buyer down there as well. Obviously, my long would be stopped out, but I would reapply it down there. I would say the only way I lose the USD JPY bullish bias is if we're making fresh year lows. And as you can see, you would have to get all the way down to 152.096 to do that. You literally retested the 618 of 2026's range the entire year. It took 3 days to do that. Like, that was a hell of a drop. Hell of a drop. So naturally, people are bearish on this. It's the macro. This happened because you had the BOJ intervene as well as the US intervention in the yen. That's why you had those 3 days of epic sell side pressure. I don't think they're going to do that like for the rest of the year. They know, like, every time the BOJ intervenes, they're spending like 20-30 billion dollars. They have intervened twice this year so far. Once over here and then over here. So they can legally do it one more time though. So the threat of that intervention is still out there, but the macro fundamental interest rate levels have not changed. The BOJ did not hike. The USD has not lowered interest rates. The only way I could be bearish on this is if the BOJ hikes and the Fed cuts. If the Fed hikes and the BOJ does nothing, this goes up. Most likely. I mean, longer term, right? You can have down days and down weeks. I'm just talking more on a macro basis. If you're looking for a long-term buy and hold, this is your boy right here. Right? And it pays nicely to be long. Rollover rates, you'll make like $4 every 10,000 units you hold. So if you buy a one lot, you're gonna make $40 a day just to hold this long every day. Love it. All right, Bitcoin pulling back slightly here. What is silver doing? Nothing yet. Dollar is making an advance as it is looking like it does want to try to move to the upside slightly today. Well, I mean, you're still messing around with yesterday's high. VIX really doing nothing much. S&P pulling back slightly, so that means our short over here is doing okay. Let's get these yellow lines so that way you know this is the NASDAQ. It's the micro NASDAQ futures. So you can see first yellow line, yesterday's low. So for downside continuation, the sellers need price under this. So that makes it easy for me, as if price refuses to break down under this, there's no point for me to hold the short any longer. I can just exit the short, get out, because the buyers are buying the dip. We'll see. I don't know which way it's going to go. I never do. That's not what makes me profitable. We've been over this a lot. I'm profitable because I mitigate my downside risk. It's a decent looking short. I generally want to make $300 for my day trades. Risk 100 to make 300. That's the way I do it. I'm only one contract short, so that's my fault. If I was 2 contracts short, I would be out of this already. So let's go ahead and set a buy down here at 719 to get out of this thing on the first bounce. All right, beautiful. We're out. Oh, no, we're not. Okay, what happened? What just happened? Something happened here. Let me get out of this, please. Well, it looks like it wants to continue breaking down, but it's probably going to bounce. Why won't it? Okay. Let's do this. We're going to have to log back into this thing because it is being dumb. So let me put you back over there real quick while I get this situated. That's probably what's going on. It wants me to log back in. And I don't want to get filled with, you know, too many positions and ruin that take profit. I didn't read the alert telling me what position was filled. Got a bunch of open stuff, so things are constantly closing that I am unaware of. We're coming right back. Here we go. Oopsie daisy. Okay, so we're still short the NASDAQ. So let's go ahead and get out of this while we can. It's bouncing. I knew it was going to bounce here. Let's see if we can get filled. All right, beautiful. We should be out of this. All right, so looks like we're long now. So to get out of a long, we gotta sell. I don't know why we're long now. I was just literally trying to close a freaking trade. And I haven't gotten that order out. Dude. Okay, closed. So dumb. So destroyed a lot of that P&L, but we're still up $200. We're fine. Here's yesterday's low. Oh, sorry, we're under yesterday's low. That's today's low. Okay, so you might be looking to liquidate today's low. And then if it refuses to go below that, that's probably where I'd want to set along. Looking at the day 4-hour time frame on the relative strength, you're retesting the 50. That's typically about where we would like to see support come in on the NASDAQ. But generally, I try to just make my $300 and call it a day on this. I don't like the fees. I don't like paying a lot of fees, so I don't put a lot of scalps on the NASDAQ. If you scalp this thing like 20 times, sorry, there you go. If you scalp this thing like 20 times, you're gonna owe like $80 in fees. I just like put on 2 or 3 trades, get my way up to close to $300, and then I move on over here to the options side of the platform. But anyways, as I was talking about earlier, where is the GLD? Right there it is. We've gotten most of the profit on that we're going to get. We still have 3 days to expiration. Like I said, we'll just go ahead and close it. We're making close to max profit. We'll give them $1 so they'll fill us. Boom, we're out of that. That's good news. That means I can look to put on another GLD trade. So what do I want to do that? Well, I need a pullback. If we could get a pullback to the 50-day exponential moving average on GLD, I will sell more puts. I'll sell puts at like 378. I don't want to buy it up here because if it just pulls back today, then I'm going to be setting in a loss. I'll be setting in drawdown. I don't like setting in drawdown. So what we need is we need at least a few days of sideways price action, or we need a down move. Either or I'm good with. This is kind of why I'm bullish on risk even today. Because if you look at the NQ now, it is still not making a fresh day low. But now if it breaks down and is trending under 66, I would leave it alone. I don't think I would be able to buy it. But if you look at this on the daily, you're making higher lows. Today is the first day that you've been able to make a lower low. So this would typically be a buying area. Higher low, higher low, higher low. This is resistance, daily res. It's the highest closing daily candle. It held there, it's held here. That's where I shorted it from this morning. But my short was very easy, right? I'm only shorting resistance because it's held here. Even though I have an upside bias, but I can take profits at the prior day's open because I'm just scalping the range. That's what I do. I'm a price action analyst. I analyze price. I put positions on based on price. Make money, then I move on. I don't need to know all the macro stuff. But this is clearly in an uptrend. So as long as it continues to make those higher daily lows, I want to be a buyer at those areas. I don't want to be a buyer, though, when you've got a ton of momentum coming into the level. I want to at least give it time to see if support's going to hold. How do I know that? Well, as of right now, that's your lowest 5-minute close. If you can't close another 5-minute candle lower than that, then it probably is going up. If you don't want to look at the 5-minute, if you want to look at the 1-minute, same scenario. Down here is your lowest 1-minute close. It's setting at 698. So if you can't close a 1-minute candle under this, then it probably is going higher. You could arguably say as long as you're above this yellow line, which is yesterday's low, this is going higher. So, I mean, you're probably going to see some buyers buy right here. I wouldn't on the NASDAQ because that's quite a bit of a stop there. You're looking at over 50 points. That's a lot. That's a lot. So that would be like, if on one contract, that would be like almost a 40, what is it, $2 per point, I think. It's $100 stop loss. It's wide. The S&P does not move this aggressive. That's why I like trading the S&P. But on the micros, I can handle the risk on the NASDAQ. But if your portfolio can't handle those swings in P&L, trade the micro S&Ps. An average daily move on the S&Ps is like 20 points. So you'd risk 5 points, take profit 10 points. On the NASDAQ, micros on slow days, you can do 25 points for your risk, 50 points for your take profits. NASDAQ can move 300 points in a day easily. And the NASDAQ can move 1,000 points in a day. It is super aggressive. All right, how is the BE trade doing? We're at $400 take profit. This has a $2,000 something max trade. I put this trade on way out in time. I'll show it to you real quick. So I put it on when there was 41 days to expiration. I just sold naked. Sold the 310 strike on the call side, the 170 strike on the put side. We look at this on the chart, it looks like this. As long as price isn't under this line or above this line, then the trade will get paid. I'm looking to close that once I've achieved 50% of the profitability. So about 800, I'll close it. It's a super risky trade. The max loss on that's like $8,000. So So I don't want to lose 8,000 bucks. Something interesting today. I said it in the Discord we would take a look at it, and I forgot to. But on Tasty yesterday, the Tasty Trade Live Network, they ran a strategy where they were selling 0-day options. So for day traders alone, they didn't really go in depth of how they manage open positions or how they set stop losses. But I do want to bring it to your attention so that way you can play around with it and back test it yourself. But essentially what they're doing is they're selling an iron condor at the 20 delta. So here you don't have a 20 delta on the call side, so you would have to be picky. Do you want to do the 22 or the 17? It's your choice. But let's just do the 22 and say you would sell this and then go $20 wide. So 75, 85, 95. There's your 20 bucks. That's the one leg of the condor. And then on the put side, you do the same thing. And sell the 19, go 20 wide. There's there's 10. There's your 20. You buy that. So essentially, this is your risk profile. What you do, you send this position off, and then when you get 25% of the profit, you close. Boom. That's it. That's the strategy. And it has a back-tested 90% hit rate. Now, obviously, there's 10% of the time when it doesn't work. So you have to mitigate that somehow. You have to decide, when do I want to exit this position and call it a loss? That's what they weren't so clear on. Naturally, if you're making 25% on one contract condor, max profit is 460. 25% of that is what, $110, maybe 110, 107. That's 25%. You would close it. So maybe set it to like 350 on the loss. Because if it has a 90% hit rate, that should keep you from risk of ruin. You would set the stop loss to like 350. This way, if you big vol spike happens and you get ran over, you're not going to lose more than max loss. You definitely don't want to take max loss. As you can see, this max loss on this is 1,500. You would need to win 3 to every 1 you lost. That wouldn't be a great trading strategy. You win 3, lose 1. You lose all your money. Win 3, lose 1, lose all your money. You're not going to make any headway. But at 90% hit rate, if you can get out, you can see how this would be profitable. And then another thing that they realized is you never spent more than 2 hours in the trade. 2 hours. So if you send the order off 9:30 U.S. Eastern Standard Time, that's when the market's open for me, 9:30, Central 8:30, but you open it at 9:30, you're out of it by 11:30. Basically, they said that the more time that you're in the trade, the more chances are that it's going to be a loss. So when the trade worked out, it worked out quickly. Hey, that's exactly how it works for me in my strategies when I'm looking for day trades. But I'm only going over this because there are people out there that watch the channel that are not yet profitable, right? You just have to find consistency, guys. You got to be consistent. You have to trade one strategy consistently. You need to trade a strategy that has a high hit rate. There you go. Now, before I would ever risk any money on this, I would back test it. Tasty has a back tester here. It's just not it. Like, I tried to run a back test on this and I couldn't get the same results that they were getting. But if you want to watch that video, maybe you could figure out what they were doing. I will bring it up for you and drop it in the chat. But I mean, a 90% hit rate strategy, if you can't make money and you're hitting 90% of your trades, your risk management is doo-doo and needs to be fixed. You should be able to make money on a 90% hit rate strategy. Let me see if I can find it. Oh, it's right here. Perfect.
Klondike hits you with brutal cold.
Shot it.
You survive. Build a warm...
I just wanted to make sure that that didn't change. All right, it didn't. All right, perfect. Beautiful, beautiful, beautiful. Let's pull this up and put it in the live chat. There you go. So that's the video. 90% hit rate. Back test it first. Don't just deploy capital to it and then anticipation of, you know, great expectations. But there you go. I mean, that's a 90% hit rate strategy according to their back test. I gave you literally all the important data and told you how to mitigate the risk. So see if it works. See if it works. If it does, trade it every day. Now, something I want to say is in a high vol environment, that strategy might not do so good, because in a high vol environment, these ranges are going to be much bigger. You can see how being at a 20 delta on today's range, because we got a low VIX right now. VIX is at 1540, so very low vol comparative to what we've been in the last 4 years. Usually, like before COVID, a 15 would be an elevated VIX. But since COVID, you haven't spent much time under 15 on the VIX. So it's been a little bit more difficult for traders to price risk out more than 30 days. But anyways, as long as the VIX is at 15 and under, it's low, this is the kind of strategy to deploy. And you can, if for your day traders out there, the people that want to specifically day trade, there you go. That gives you a trade every single day, because SPX has 0-day expirations. It's beautiful. 90% of all options expire worthless. 90% of them expire worthless. This is why you would rather be on the sell side. The sell side obviously has more risk, generally speaking, but the strategies or the trades hit more frequently. And it's up to you, as far as risk management is concerned, to make sure that you don't blow up, right? That's the point. You win 300 trades in a row, it doesn't matter if on the 301st trade you take blows your whole account, right? All right, let's get some positions on. So we're going to run a scan here. We're going to scan for high IV if we can. Hang on, let's just do something real quick. Let's go look at tech, because that's generally where the high IV plays are going to be. So Apple generally runs on a low IV. I would say Tesla probably has a high IV. I'm looking for over 100. I doubt Tesla has that, but it's a 9. Not good. I want these numbers to be above 100. If we can find that, that's what we're going to do, because we're looking for the IV to crush over time. Last week, this was up nicely. I don't think it was at 100, but it has crushed down significantly here. And we want to go out further in time, because we want to give the trade time to work. So preferably a high IV out in time. But it has to be a liquid asset. It can't be a penny stock, right? Let me see if they have I don't know what this is. This one's got pretty decent high IV. Let's pull up WDC. That's why it's got high IV. It's an expensive stock. This one doesn't look as good because it's literally trading on the lows. There is a 200-day exponential moving average down there to stop it. But we just had earnings last week on this, so this would be a candidate. Let's go check it out. Juicy freaking premiums on this thing, man. Okay, so this one's going to be expensive to sell naked. What we're selling there is 16. So not as bad. Buying power, max loss is unlimited. Buying power 43.69. That would not be that bad. That's actually a great return on capital margin. But it's so close to breaking in and free falling into fresh lows. I want a sideways asset. It is sideways, but it's on the lows of said range. So I guess we could put it on and then just give it a few days. And if it doesn't get back above 422, we could close it. We're at 350. Let's see how close that is to the stock's price where it is now. You've got 1-2 monthly lows to push through here. The 350, and then top side, the call side was what, 580. The call side is probably where we're going to lose the most money on at the beginning, as I would assume you're probably going to bounce here, being that it is the dog days of August. Big volumes last week, I'm sure, because of earnings. Volume was lighter than average yesterday. Yeah, if volume can stay like that, it'd be beautiful. So this one's going to go on watch. WDC. And we'll send it a little bit later on to see if it can hold support here. All right, what's up, Trade Talk family? Says Oxum. Tom said good morning. Good morning, Jewelry Affairs. Silver looks okay for a short. I mean, if that's what you look for, it doesn't look okay for a short to me. It just doesn't. It looks like it. So when I have a bias on something, I generally only want to take the trade in that direction. I don't necessarily have a bullish bias on silver, but I do have a bullish bias on gold. So because of that, make it a little bit more difficult for me to take the short on silver. I mean, to be honest with you, this doesn't look good for the sellers. They need to be able to break support. If they can't do it on this candle, they got to do it on the next candle. And then your profit target, that's going to be another thing. What is your profit target? Today's low or yesterday's low? Well, it would be a bearish engulfing today if it made a fresh 2-day low. And that's on a pretty good day. So I think if you're targeting yesterday's low, you're probably not going to see that today. Unless the dollar is ripping to the upside today, and it's not doing that. It's pulling back on USD/JPY. Is the dollar strong by itself? Not yet. It's struggling at yesterday's high. Nice descending wedge formation happening. You've already broken it if you use that wick. You're testing it right now if you use the close or the open of that candle. Yeah, probably gonna need more time here for that, but yeah, if dollar breaks down, and it is at this point in time trending lower, and it has been for the last 4 days, silver's going higher, chances are, right? You need a strong dollar for a weak silver short. And even then, because gold did do that fresh upside breakout, all your retail traders are going to be jumping on this thing. People love gold. Like gold, many people love it. They love it. They want to buy it and hold it because they know it's going to go up over time. The only reason I was bearish on gold back earlier on in the year is because I was looking for a blow off. It got way too bullish, way too long. Like, but China is firing up their economy again. This is a solid breakout signal. We went over this in the Discord over the weekend and yesterday. Oh, we didn't go live yesterday. Never mind. It did it on good volume. This is on Forex.com. They don't provide volumes. So let's go over here to a company that does. So, I mean, on FXCM, the volumes don't look that good. Here, just look at GLD. The volume looked good on the futures. See that breakout on higher than average volume. Average volumes on GLD about right in here. So you get a breakout on higher than average volume. Yep. All right. So that's a good breakout. That's typically that's your retail buy signal, right? Breakout of a trend on high volume, you buy that. So now people are going to be looking for bull flags to buy. That's what people are going to be waiting on. So first bull flag area is going to be in this area. So if it finally does pull back, then silver will have a nice move lower, right? But these pullbacks on these candles have been very shallow. The buyers are very aggressive on this right now. Look at it on the 4 hour, like you've only gotten a couple candles that were red, and then the buyers show up. Red, buyers show up. The buyers are aggressive right now. I would love to see it pull back to like 385. That would be chef's kiss. I would get short premium and look for futures positions on the perps. So I'll sell puts on this and buy futures. With leverage on that. Big volumes here. So yeah, it does look like the sellers are trying to get a pullback today on gold. Fair enough. Fair enough. It makes sense that they would. I mean, sellers sell. That's what they do. If you look at XAU, what is this thing doing here? Sorry, I got sidetracked. But, like, my live stream is lagging for me, but I'm not dropping any frames. Anyways, let's go over to XAUUSD. Oh, wait, no. Yes, this is what I want. Forex.com. So here, let's go to FXCM. TBC. Yeah, I haven't charted this. Perfect. If I put this on the monthly, you can see how this wick was acting as resistance this month. You broke out above it but couldn't close above it. Then this month you pulled back all the way to that level and it acted as support. Through it but couldn't close under it. Support. Look at this candle right here. Wicked right in to 43.80. So I don't know what it is about 43.80, but you are seeing resistance, old resistance turn to support, then you broke through it. So could this be an area of interest for sellers to show up? Sure. Yeah. You've also liquidated this swing already, so that's good. Yeah, I mean, look at that beautiful support test right there. Bam. So it does make sense that we go sideways here, at least for a couple of days. Maybe. We'll see. We'll see. 4-hour supply. It's not the best supply candle, but it is supply. You did close under the low. That's what you want. This is basically where you'd want to see the sellers show up. This is last week's. No, that's not last week's high. That's that level. Let's put last week's high. It's so close to last week's high. I guess you could say it is last week's high. So you definitely want to see price fail here if you're a bear. What's SpaceX doing today? Pulling back slightly. All right, so let's go look at risk real quick just in case. So it is holding support at yesterday's low. I forgot what the bottom line. It was today's low. Yeah, I mean that looks like the buyers are back. Buyers are back. SpaceX finding support at yesterday's open and at last week's high. Traded at last week's high yesterday for hours. That's last week's high right there. 1, 2, 3, 4, 5, 6, 7 hours before it left that area. Today, right back down to it, and that's where your buyers are showing up. I would love to see a deeper pullback than that so I can get back into a short put trade. I wouldn't. Baby, can you grab me a can of dip and a water, please? Thank you. I wouldn't exactly say that this is in a short squeeze yet. I would say that that big spike that you saw last week was mostly a short covering rally. But if it continues to run like this, then you will start seeing a short squeeze probably. Thank you, baby. Yeah. TLT's green today? Crazy. This thing's been getting murked. 30-year yields are up on highs today, but pulling back. 20-year yields. Whew, so close to breaking out. 10-year yield, so close to breaking out. I'm going to watch this like a hawk today. If it refuses to close under 428, I'm going to send that trade off. All right, Archimedes in the Discord is killing it with a scalping, says Joy Affair. Yes, yes, he is. Let's go silver. Good morning. He says Chase, Power Bull, morning. Gold, bullish bias above 43.20, 43.50 structure, targeting 44.80. That's a hell of a profit target. Could it happen? Yeah, absolutely. If CPI cooperates. Yeah. I mean, if CPI comes out with high inflation, I don't really know how that would affect gold, to be honest with you. See, because the US and China are in a capital war, essentially, US stock market and Bitcoin, the Fed controls that stuff, and then China controls gold. It's just how it's been for a long time. And central banks are buying gold still, so, I mean, the sky's the limit for gold. It really is. And now it's illegal for Chinese citizens to short gold. So it's, sky's the limit. I have a bullish bias on it. I want to be invested long term. I just need a pullback. I don't ever want to buy day highs. And the reason for that is simple. Generally, you get a pullback. When I buy something at highs, it pulls back. This is case in point. I literally bought this on highs on this day. Right here. So I got entered into a long at 73.69. Look where this thing is trading now. That usually happens to me always. Something else happened here because you had a 2-day breakout and then earnings and then puke. That's why I hate buying highs. I don't want to buy something that's up. I want to buy it when it pulls back. Yeah. This looks like this is getting ready to make a run to the upside to me. As long as Verizon stays above 45 bucks, I think Verizon's going higher. This is another one. That one I bought on highs and it pulled back, but it ultimately broke out. So that, just be aware of that. So buying gold here, it's not, all-time highs, but you would be buying the breakout after the breakout highs. Right at resistance. So give it a couple days, let it pull back, then buy. That's what I'm looking to do on it. And I don't want a deep correction. I don't need a deep correction. I'm telling you, I will buy it right here if it refuses to go lower. If it takes 4 days or 5 days, I don't care. If it refuses to go under 395, I will short puts and buy futures. I'm uber bullish on gold right now. I wish Bitcoin would get back to being uber bullish. But we'll see what happens. The BIP 110 stuff happened over the weekend. The miners stayed away from the BIP 110 chain. So now the BIP 110 chain has essentially stalled out. So BIP 110 did not work. And now I'm hearing people on Twitter talk about a hard fork and all this stuff. So, I mean, obviously, that risk is still out there. But it's mostly over with, I would say. But we'll see. Just on a pure price action, pure speculation, this is still good. You're testing the 4-hour 200 exponential moving average. Just like you did here. Just like you did here. Just like you did here and here. You're still doing that. So if it can hold, I would say this is still, I would say the risk is up to 67. But if you break under these lows and put in a move down into here, then obviously your target is lower. You're looking for these lower lows down here. But it's like the last place. So essentially the daily would be putting in, yesterday would be a bear trap. That's what I would like to see. But as long as the sellers are climbing all the way down to here, not climbing, but dropping all the way down there, that's an issue. It's an issue. And as long as Bitcoin is struggling to close daily candles above the 50-month exponential, that is an issue. So I really don't even need to know what's going on in terms of macro. Technicals are plenty good enough to keep me into positions, I guess. I'm both long and short Bitcoin. I'm only short to protect my longer term hold. My cold storage, if you will. Because nobody really knows what's going to happen. Ultimately, I think Bitcoin makes fresh all-time highs and higher. Because literally the financial world has gotten involved. And I just really can't make the argument that they would get involved if they didn't think it was going higher. I mean, Goldman Sachs did a complete U-turn on it. Just back in 2021, Goldman Sachs said they would never, ever, ever buy Bitcoin. They would never get involved with Bitcoin. Ever. Like, they were adamant about it. They hated it. This year, they're making an ETF. So, boom. They did a complete 180. Why? Why would they do that? If they thought it was going to zero, they wouldn't. They wouldn't. And that's the strongest argument I think that can be made for Bitcoin, is that Wall Street has come. That's what everybody wanted back in 2020. Man, if only the big banks would invest in Bitcoin. Now that they're here, everybody hates it. Oh, whatever. It is what it is. It's a speculation vehicle. That's what I use it for. Simple as that. I use it to make money. S&P still very sideways here this morning, but it does look like the pressure is to the upside. I think it goes higher. We put a trade on McDonald's last week. Let's go check that out, see what it's doing here. I don't even remember the trade that we put on. Looks like we sold puts. That does not look to be going so well here. On the daily, it's super bear. Ooh, why did I sell puts on... Someone tell me why I sold puts on McDonald's. That was the dumbest thing ever. No, I'm kidding. I sold puts on McDonald's because I said as long as it's above this, I'm okay with it. That's where my short put is, 265. No, it's at 270. Woo! I got ballsy on that one. Ballsy. I'll close that trade. Well, it's only got 10 days on it anyway, so I won't have to do anything with it, but we'll see. Doesn't look good on the near term. It's right into resistance. I bet you it had closed back above the 50, and that's why I put the trade on. And 3 days later, it broke back under. The sellers are trying to get this to break down. There's really no earnings or dividend risk, so we'll see. It might work out. Oh, for you guys, if you want to run a scan to trade options, this is the scan that I'm running to find trades. So if you want to pause it here, this is a free website. You don't have to pay them. All you have to do is give them an email address and do a login, and it's free. You don't have to pay anything. Market cap, you want it set specifically at mid over 2 billion. That's going to give you more liquid assets. You want the SMA 200 to be below the SMA 50. You want an uptrending asset. Price below the 50 though. You want it to be pulling back. Price below, where's it at? Right here. Price below the SMA 50. USA, country of origin. That's it. That's the scanner. And it'll give you bullish assets. And typically all I do is I just scroll through these. And here, BE came up on this scan. That's how I found BE. Once I seen it and realized it was on the scan, I checked the IV. You could even do that if you're specifically looking for an IV crush. You can set it to like 80 or 90 and higher IV. That would knock this down dramatically though. Go back one more. Right there. So that's it. So if we pull this up on the chart, you can see you're above the 200 day. Price is below the 50. Perfect. We want the 200 to act as support. It has. We don't want it to rally. We just want it to stay sideways. That's it. If it stays in between these two averages, we'll be good. We'll be golden. We'll make money. But uptrending asset typically, and that's just one strategy. You could do many different strategies. You could sell puts, you could buy calls, you can buy shares. You're just typically looking for a trending up asset. That's what you want. You want assets that are trending because you're looking to participate in said trend. And then 5 years of data. I usually go for 10, but 5 years, as long as it's higher than a 5-year open, then you are trending up. Then you can sell puts or buy calls or do condors or, I mean, there's so many different ways to trade it. But typically speaking, you want support to hold, high or low support. And just by running that simple scan, we'll find you more stocks than you even have time in the day to look at. 36 pages of stocks. I only want to trade the ones that are good, with good liquidity. And typically something I know or have traded before. ENPH is definitely not in an uptrend. So I don't know why that one was. Let me go look at ENPH. There is no way Enphase is up. Yeah, this is wrong. This is not what you want to buy. You could make the argument that it is building in long-term support. It is. That is long-term support. I just don't know if it's going to go up. But it does look like it's done going down. Let's go look at the options on this. It's got weeklies. Are they liquid? No, they are not. They are not liquid at all. And the spreads are too wide. Way too wide. 40 cents is a good rule of thumb on the spread. You don't want it wider than 40 cents. But something like this would be okay to do like a YOLO play on, maybe. Oh my god, I hate the width of the spreads though, man. They're god awful. Would I sell the $35 strike? Yes, I would. So I could do something like that. I could sell that if they would fill me here, but it's so illiquid. They could fill me. I could take the premium, the 164, and then go up here and place it on a way out the money call. That's as bullish as you can get. I have a similar play on Bitcoin right now. On iBit. Just not liquid, but long term, if they start making money, this thing could fly. This used to be one of my favorite ones to short. But anyway, simple scanner just to help you find things to trade. Something like this would be beautiful if it can stay in that range. EXR. It's not liquid and it don't have weeklies. It's got liquid. It's just too wide. Please get gold. I need to get some. Yeah, I'm gonna buy gold for sure. For sure. Gold is going up. I would just like to see it pull back. What's form? No weeklies. Never mind. Next. There's Goog. Goog L. Goog L. Very low IV. So if we played this, it would be for a bullish bounce. Let's check out Goog. It's at the 50. So it needs to hold here if it's going to be bullish. So this one might be better to wait until tomorrow. So basically what we want to see today is we want to see where does it close. And then tomorrow, if Google gaps up above today's low, then I'll look for a position on Google tomorrow. I think you're probably seeing a bear trap today. Maybe. Obviously, I don't know. But if it did something like that, gapped up tomorrow morning away from today's low, then at least I can put a position on. I can sell a put spread or just sell naked. Generate some more. So Goog L going on the watch list. We got WDC and we got Google for tomorrow. I'd like to find something to trade today. I didn't put on any trades yesterday. I didn't see anything that I liked yesterday. What do we got going on over here? So our AEP, this one's got some time on it. 10 days. This is a big company. It'll be fine. CVX. This one's going to probably lose. I was thinking that oil would go down, I guess. General Mills. I like this one longer term for a buy and hold, but since I don't love the chart, this is like, I'll just scalp it for now. You can see how it refused to break down. That's a good sign. That's a really good sign. Longer term, I think you're building in a support here, and I like General Mills. General Mills is a good blue stock dividend or blue chip dividend paying company. They're a conglomerate. They're not really a company anymore. They're mostly a conglomerate, but I think this would be a decent one to invest in if it can recover and hold the 200-day. The 50-day is good enough for me to start putting positions on it, though. So that's what I'm doing here. I think that in 10 days, this will be higher than 37.50, or at least that's the trade idea. And since it's a spread, the risk is mitigated. So not bad. We'll see what that one does. I put that on Friday because I was putting that on just to see. Maybe it bounces. KO is a full position. We own shares in that. McDonald's we've already looked at. MP, pretty sure oh, there's nothing there. Wait. Yeah, we own that. NLR is another stock we bought. Nvidia this is Michael Burry's short that he put on. We put this on when Michael Burry did. Michael Burry put this on with like $10 million. I put this on with $60. And it's a pretty good thing that I didn't put this on with $10 million. Because I would have lost $10 million. It's still got time on it. He may still be right. But I'm telling you, it's looking pretty freaking bad, man. Whew. Pretty bad. This is him. He's still in this. 12,000 contracts down here at 50. Yeah, that's a YOLO if I've ever seen one. And then this SPY is just insurance on for the long portfolio. It's just a way out the money put. Just insurance. STRC's doing good. Not much credit on the above strikes, which obviously there wouldn't be, right? It's not supposed to go over 100. UNH. 10 days left on this. Looking good. Looking good. As long as the ITM line stays above 397.50, we'll make money on it. Wait. Why did we take that trade? You mean to tell me that the max money we can make on this is $50? What was I thinking? Anyways, UPS, another trade. 24 days. That's pretty widespread. That's not great. The UPS must be getting beat up today, huh? Not yet. Still like it, as long as it's not trending under 102. But yeah, it got beat up pretty bad last week. It's at support here, so hopefully it holds. Should hold. We've already got one on. Actually like this one. Not a lot of liquidity on this. I don't know why I had two open interests. We'll see if this holds support. So far, so good. It's just retesting yesterday's open. I don't like that it failed at Friday's high, though. But as long as it's above yesterday's low, I'll hold it. And then lastly, Walmart. 3 days left. Getting close. Yeah, this one is also trying to put in a downtrend. I don't like that. It's wedging up, so maybe we can get a pop. We'll see. It's definitely more bearish than bullish. And it's into resistance on the RSI. Resistance is going to be 114.25 on Walmart. And then we got to find something to trade. So if you know one, let me know. We'll go look at it. Hims, let's check Hims out. A lot of people usually ask to see that one. So far, so good here. Looks like we were watching a support, and it looks like that held. Let's look at the options premium on Hims. It's got high IV. It's literally beautiful. Not down there. 23 though. $29.50 is the midpoint. That's a good looking weekly expansion there. Did they just report yesterday? Gap down. So if it's this low 38 days out, there's going to be nothing on the near term. It's got a lot of liquidity. This is a nice chain. Nice and tight spreads. Plenty of strikes. I guess because it's low priced. heavy resistance. If it was closer to 2760, I would put it on, but you broke down below the trend line and then snapped right back up. So that forced a lot of people out of their position, and then it bounced. So we might be able to put this on and then just watch that swing low. We put a spread on. Anyways, it's not bad. Let's see if we can get filled on HIMS. Robinhood. If Robinhood wasn't so tied up into Bitcoin, I'd like it better, but it's got weeklies, decent premiums, good liquidity, healthy spreads. All right, let's pull up Hood and analyze it. It's holding support at the 200. That's beautiful. What does it look like over here? Beautiful. It's holding the 50-week as well. It just reported earnings a couple weeks ago, so we don't have any of that risk. It's not super high IV, but it is high. All right. So what are we thinking? Ooh, these spreads are $5 wide. So we could probably do something like this. $108. $115s. So we double our potential profit and our buying power risk goes up by $100. Not bad. I really do not like it's the near-term volatility. That's the reason. Did silver break down yet? No. I don't think it's going to, guys. Yeah, it looks, I mean, it still could, but what if we did that's a little bit more livable. Let's do that instead. Hood, Hims, Harley. Nobody's buying Hormel. hog is Harley. Nobody's buying those things anymore. Let's go look at interactive brokers. IBKR. Beautiful 5-year chart. Holy cow. Looks like owning a broker is a good business. Or an exchange. Or getting paid. This sell like I mean, that looks like a bull flag, kinda. All the way to September to get the dividend risk. They have weeklies. $85 is the swing low. The call side is wider. $96 up there. I probably would feel better on the put side than the call side on this. But damn. Let's send it. Not getting filled on anything today. What the hell, dude? All right. Do you guys got anything that you want me to take a look at specifically? Laser's getting killed today, so nope. Cheap, 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 cheap. This one's not cheap. Lamb Research. Oh, I forgot about them. They're going to have mad amounts. Massive amounts. LRCX. Yeah, big stuff. All right. The 290s. This thing is so volatile. It can do that in a day easily. I think I'd feel more comfortable selling like a 16 delta on this one. $5 wide. Damn. That's so close. If it was above the 50, I'd feel so much better about it. That's just last week's low. Well, 275 is last week's low. So I'm under last week's low. But it could literally get down there in just 2 days. So there really isn't nothing in the way of support to hold it up except for like that. That's not much. Daily support sets at 294. Last week's open 283. We're under that, so I tell you one thing, it would be a big loss. So you'd be like, let's see what we got closer. Like this week's expiration. It's about the same still. It's not a very good return on capital. That's the problem. Or risk. You're risking max loss 877. So it's about a 10% return, a little better than a 10% return. But a significant loss. Be a 1% loss on max P&L. Bitcoin just took a nasty swing low. So Bitcoin dropping here, making a fresh day low. That's not what we wanted to see. We don't want to see it start trending under the 200. That would not be a good thing. I mean, it didn't amount to much over here, right? To be fair. You lost it, and then you built in a longer term support. No downside continuation. But you've got 2 days worth of downside here to this week. These are your BIP 110ers selling all their Bitcoins. Because the likes of Michael Saylor owns Bitcoin. Alright, we'll leave this one alone. This one's a little bit too volatile for me, for my blood. Too rich, too volatile. If I was, like, if I could get 30 or 40% return on risk, I would do it. But there's no way. Unless I do both sides of the trade, I don't think I can make it work. Let's just see real quick if we were to do... Let's make it even and do $10 wide spreads on both sides of the trade at a 15 delta. So the risk stays the same and the max P&L goes up. So it is about a 30%, ain't it? To be fair. And that's this week. We're not under 280 though. Let's go see what we got on an intraday basis here. Deltas are positive. Slightly. Very light volumes out there today. I guess everybody is waiting for CPI numbers. This is very much inside. Monday was even inside Friday. So you've got an inside day. So the risk is the break. Either you break down or you break out. And the bears are looking for the breakdown for sure. $340 is the upside. That's so close. I'm gonna leave this one alone. That one's likely to get either side of this tomorrow, depending on what the CPI does. But yeah, I don't like it. Mara. I don't think there's any premium on Mara. I would only sell calls on that though. I would be on the short side of Mara. I don't think Mara is going to do any. Look, Mara looks like, I mean, it looks bad. $5 years. Mara looks absolute. Mara's a turd, man. If you own Mara, get out of it. It's a freaking turd. Chances are, though, if Bitcoin rallies, this does get a nice big bullish pop, but I don't know if Mara has pivoted to AI the same way the other one did. The other one's ticker, I know it's Riot. Right on the tip of my mind. Yeah, not much premiums. Still not much. Spreads are tight and it is very liquid though. Do something like this. But a million of them. Where's 2150s? Too close. I would have to go all the way up to 24. And there ain't shit up there. Less than 10%. There's not enough premium on it. Oh, we're 3 days out. Goofball. That's better. That's much better. So we could sell the 26s. Ooh, these spreads are bad up here. Yuck. No good. No bueno. Yeah, never mind. Leave it alone. No good. The airlines. Nothing? Nobody has any trade setups, trade ideas? No, I want 5 years. You were right at rejecting 5 years. I would have to argue that it looks better, though, than it... Yeah, there's just nothing where I would be interested. All right, moving on. Next. How long have we been going here? We'll tidy this up. 2 hours. I'll go another 20 minutes and then we'll wrap it up. Seeing how the markets are literally doing nothing today. Yeah, NASDAQ is just chopping at this point. Ooh, look at that. Hasn't gone anywhere. Just literally chopping. You got one nice move at the open and then that's it. I would still be a buyer more than a seller today based on this. Especially if you make fresh low on the VIX. I would ignore Bitcoin and just, because you're moving away from yesterday's high and heading to yesterday's low, I'd be more of a buyer on the NASDAQ based on current structure. You're making higher daily lows. Today was the first day that you were able to make a fresh day low. But if yesterday's low acts as support, and it is doing that, I would be a buyer there more than a seller at this random area. I wouldn't be a seller. Some people will be a seller here because they're going to be looking for 4-hour supply, but that's not... I mean, I guess it could be, right? You made the low, so if you're expecting continuation, then that's where you'd be looking for the short or 4-hour res. Here. It would be a difficult short. But if it got up there and rejected, then maybe I could sell it. But because it's doing this, I would wait for price, which you probably won't pull back to here today. If it does, I would leave it alone. Tomorrow's CPI. Tomorrow's when we're going... If we're going to get volatility, it'll be tomorrow. Made $300 yesterday. Made $200 today. So we're doing good. No point in giving it back on a sideways, choppy-ass day. We still haven't gotten filled on HIMS, Hood, or Interactive Brokers. The liquidity is very thin out there. Volumes are low. Boring-ass markets, man. MU is going to have premium on it, but it's going to be the exact same thing that we just looked at with Lamb Research. It's going to be too volatile. It looks good, but it's going to be the exact same thing. It's probably going to be right in the middle. Which one did we trade the other day? Let me see. I didn't put it on the watch list. I want to say it was the Van X Semiconductors ETF. This one is an actual company though. That's in that ETF, MU. Let's pull it up, see what it looks like anyways, just to be clear. It looks exactly the same. The technical structure is exactly the same. It's building in a wedge, but holding the 50 as resistance. Daily looks really good for upside continuation. What are these two alerts? Oh, that's gone. What was this one? Carvana broke to the upside. It didn't hit the alert. Must have hit it pre-market. Nope. August 7th. I don't know why I got the alert. It never did cross it. I think we were going to short it if it stays under 75. I really don't remember what we were doing here. Anyways, back to MU. Yeah, tomorrow you'll either break to the upside on this or you'll break down. But if you break down, I would only expect it to get to 739 and that's it. I wouldn't be anticipating a large breakdown here. Could happen. Obviously, it could happen. It's definitely making lower weekly highs. The sellers are getting more aggressive on it. But the structure is still bullish. Down here will be a good trade. It'll be a good trade when it gets down here. If it gets down here. It's the same trade we made on the semiconductor ETF. And that was a good trade. So we'll put an alert on MU to watch it down here if it gets down here. We also want to know though if it breaks out and makes fresh 3-week highs. So we'll wait on the alert to fire. I think you're probably going to see this for a few more weeks. There goes whatchamacallit. That was a bad call. Damn, it got down there quick, huh? Oil was up yesterday. Today it's pulled back, but it's starting to pop again. So, I don't know. Oil's choppy in a range from 84.50 down to 73.68. Big range on oil. Dollar still messing around with yesterday's high. So literally no market is doing anything. Gold and silver still chopping sideways. Let's do 713 and then we'll leave it alone. So if we get a close under, then we know we're wrong, right? See that 1 minute close? This candle closes under it, we're wrong. Damn, that was so close. Too close for comfort. All right, let's do 2 contracts there then. Yeah, we'll just leave it. Sellers got it down here. They need to keep it down here if they have any hopes at all of getting a larger move today. There's nothing really to sell up there. 4-hour res, 4 hours supply. You could make the argument that since you made a fresh low of day, there is a chance that you could get downside continuation. But you're in an uptrend, a near-term uptrend. So the pressure is still to the upside. Now, if you did get more downside continuation today, that would, if there wasn't news tomorrow, that would have me more probably on the sell side tomorrow. But because there's news, no. It's like Bitcoin and the S&P and the NASDAQ all sold up at the same time. All right, there's your lower close. So it clearly wants to go lower. Bless you, baby. We don't care about this. This was the day low. That is the new day low. That would be the downside target from here. For the sellers looking for continuation. Volumes are light. Volumes are heavier up there. And then they get light. Again, where's the POC? Up there. 29,750. It'd be choppy. You got 4,000 trades or 4,000 contracts up here at 750. POC midpoint of the daily range, essentially. Very choppy, very slow day. All right. I guess since nobody's got anything they want to look at or no questions being asked, we'll go ahead and wrap this up. Hopefully we'll get filled on those couple positions we took. SpaceX still not doing anything. Nothing's really doing anything today. Bitcoin's moving lower, but it's just down 0.3%. Just a whole lot of nothing happening today. Pingu did get wrecked. We were watching it at the weekly open, and it obviously couldn't hold that, but it's not down terribly. I think if Bitcoin continues to sell off, this will get faded as well. And then ZEC got absolutely destroyed. So it's getting even more downside continuation. So next place that I might be interested in doing anything at Zcash, well, it's going to be down there, unfortunately. We'll see what it can do. It's definitely looking for a lower weekly low. Nice downside expansion on Zcash this week after making a fresh week high last week. Yeah, it makes total sense, right? No, it doesn't, but it is what it is. Big resistance up here, the early opening range. That's what's held. And now the longs are getting peeled away. So no reason fighting this. This thing has almost completely flipped its near-term structure. Can't really make a good trend line out of that, so no point in trying. What did XMR end up doing? It's probably doing the same. No, it was actually bullish. I would expect this to fail as well. Last week ended up being a real good close on it. Every time I try to short XMR, I get wrecked. Not wrecked, but it's just not an easy trade. It's a fresh break down below the weekly open. So if it could reject the weekly open again, 395, then maybe look for shorts on this. It definitely doesn't look like a short. But it's a lower high on the yearly range. So maybe we'll watch that. For short side setups. But other than that, yeah, we'll see what happens. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.